Well, the investment sectors and styles that I think offer most promise, I think are very much focused on smaller properties in the secondary sectors and in the regions. That's not to say there isn't attractive rental growth in areas like the West End of London, but we think there's very attractive yields looking across the rest of UK in smaller secondary property. And there are a number of reasons for that. If you try and buy prime property in the regions, there simply aren't that many buildings which you would regard as prime, and indeed they don't trade very often. Conversely, in the secondary sector, there are many more investments and they do trade more often, and there is a yield differential between prime and secondary, and we think that yield differential is attractive at this point. So for us, in where we've been focusing, not just this year, but for a number of years now, and we will continue to do so in 2016, we've been focused very much in the regions in the UK. There's one comment I would make when employing that strategy, and that is a pretty basic one, but it's vital at this point in the cycle. And that is, this is all about due diligence. If there is ever a time to really focus on due diligence, it's now, when the market is buoyant, because in 3 to 5 years' time, if the cycle turns, that's not the time when you want to find out that your rent review clause or the lease terms are not what you expected, or indeed the environmental survey didn't show up some critical factors, and you find that the value of the property is not what you thought it was when you come to sell it in a few years' time. Well, I am worried about the impact of the minimum wage legislation on the healthcare sector. I'm less concerned about the impact on our fund, but if I explain why I express those views. For the minimum wage to be increased is obviously an increased cost on operators in the nursing home sector, and we're not seeing the corresponding increase in fees from the public sector to pay for the beds. So any operating business that is highly exposed to the public sector beds is going to find higher costs but not higher fees. Conversely, if you have a high exposure to the private sector pay, then you already are paying the minimum wage to most of your staff in most cases anyway, so the impact is less there. But if you have a model which combines both private and public sector bed rates, then inevitably you're going to probably look to push up your private sector bed rates compared to the public sector. So I think for our fund, we have a high percentage of the private sector bed rates, and there is some insulation in that, but I think as a industry overall, I think it's inevitable there'll be a significant impact on smaller operators highly exposed to public sector bed rates.